Today, we're going to be looking at the GbpUsd commander. And this bot seems really interesting because the developer is claiming that it is the lowest risk expert advisor in the world, which is a pretty big claim, but it appears from first glance to have a real strategy, so very excited to dive in. This video is sponsored by our free Golden Time Bomb Expert Advisor. Take your trading to the next level through automating the London breakout and the opening range breakout. Click the link in the description to download the EA completely for free. So this bot here is a scalper which trades the GbpUsd on the M30. And this is a fairly common type of scalping system. The GbpUsd tends to work well with scalpers because it has very low spreads, but you tend to also have a bit more volatility than what you would typically see with like the Euro USD. And that's why I actually have seen quite a few successful scalpers trade the GbpUsd along with the USD yen. Because generally speaking, most scalpers work well on gold because the volatility to spread ratio is quite solid. Whereas if you try and trade, for instance, the Aussie New Zealand dollar in a scalping method without using a grid martingale, it can be a bit challenging to get an edge because the spread versus just the amount of normal movement is rather high, which makes it tough to find a symbol or a strategy that has a profitable edge once you factor in spreads, commissions, etc. So that all makes a lot of sense to me. And effectively here he's saying that each trade comes with both a fixed take profit and stop loss, and that he's not using martingale, grid, or hedging techniques, and that there's a clear logic for entering certain positions. All of that is a good sign. We don't typically like to see grid martingales unless they're used in a very strategic manner. And effectively here we can see that he's using a fixed stop loss of 200 pips and a fixed TP of 100 pips. And this is common for a scalper. You will typically see an inverted risk reward, and that's almost what scalpers are by definition. They take profits really quick, and usually you need to have a larger stop loss for this to work. And for this type of bot, like more of a scalping style system, likely more of a breakout style system, this actually does usually work better. So if you want to have this type of bot, you typically do need to accept a lower risk reward, but on the other side, as I made another video on this, usually your win rate will also be quite a bit higher, so there can definitely be a valid system here. One thing to note when using a fixed stop loss and take profit is this can be a bit challenging over long periods of time, because over 2 years, 3 years, 4 years, the volatility of the market can change quite a bit, and you won't necessarily have the best results using the same static stop losses and take profit. And that's why I usually prefer to use a percentage of a daily range, or to use a percentage of price, or something which is more dynamic and adjusts over the years. So this isn't necessarily the end of the world. You just need to be mindful that if you're still trading this EA in 2 years, you're probably going to need to adjust the fixed stop loss and take profit just to keep it current with whatever market environment we're seeing. And it also does use dynamic lot sizing where it adjusts to accounts balance. And as this is a scalper, he's also saying it works best with the low spread brokers. So all of that looks quite good so far. It seems like a real strategy. And now we can pop over to the signal here. And what's quite good is we are seeing both winners and losers. There is a little bit of lot scaling post loss, and I will dive into this in the signal too. Like sometimes there is a little bit of scaling, and we're seeing here, for instance, where it goes from 0.1 to 0.2 to 0.9. But I believe this is an optional setting which you can turn off. Here if we go to statistics, so far we're seeing an 84% win rate, and we are indeed seeing that inverted 1 to 2 risk reward. So this would be, for this type of system, this is exactly what we'd be hoping to see. We're looking to see a very high win rate, but also seeing that the risk reward is indeed consistent with what he's telling us. So all of that is looking very, very solid. Now if we dive into MT5, I've taken the liberty here of running a backtest real quick. And if you look at the backtest, at the inputs tab, you can see that we do have a recovery function here. So we'll go back to that, but let's first look at the graph, which looks really impressive here. We're turning 10,000, or granted, like the net profit is not that impressive because I used low risk, but the actual, the shape of the equity curve is looking very good. And we are seeing here, obviously, an extremely low drawdown because we're using fixed risk. Let me maybe turn on true dynamic lot sizing here to see how that works. But while we let the backtest run, let's also talk about these recovery settings. And what a recovery setting does is if you have a loss on the next trade, it will tend to, generally speaking, increase the lot size. And this is very tempting to use when it comes to these high win rate, low risk reward systems, because usually you lose more when you lose than what you make when you win. So let's say when you win, you make $1. When you lose, you lose $2. So in the event of a loss, what will typically happen in these recovery systems is you double on the next trade. And this enables you to fully bring your equity curve back to break even. The real issue with this, and the reason why it's tempting, is because it gives you a very smooth equity curve in historical backtests. But it can also be heavily dependent on historical kind of distribution of trades matching go forward distribution of trades. So I tried this personally, so I can give you an example. Like when I did this with my US Lightning bot, this bot traded once a day, and it trades the breakout of the New York market open. And I had seen that for months and months and months, we pretty much never had two losers in a row. Because similar system, it had a like 85% win rate, and effectively it almost never, even with forward testing for 4 months, never had two losers in a row. So I was like, great, maybe a recovery function here, whereas if we do have a loser, we size up in the next trade, will give us an exceptional a bot with a really, really smooth equity curve. But then, like, the tariff volatility happened, and all of a sudden the distribution of winners and losers completely changed. And then if you were essentially using a recovery function, your losses would have been rather significant. And for me personally, I capped it. It was a very safe recovery, it only had one level. But at the same time, this system is very susceptible for failing on a go-forward basis, because if your distribution, so like win-loss, 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 changes, all of a sudden the recovery function can fall apart. So that is the one thing which I'd be very mindful of. It's very easy on historical back testing to look at a recovery function with this type of system, which is not a grid martingale, which only has 1 or 2 levels, and say, wow, this is tremendous. However, on a go-forward basis, if the order of the trades change, not even the risk reward, not even the win rate, like you can still have the same amount of winners and losers, but if the distribution changes, this thing can break down. And you have to be really careful of that, because it's very susceptible to slight differences in market regimes or conditions. In terms of the actual system, it looks to be, it's not as breakouty as I initially thought, because it is taking both longs and shorts in relatively close proximity to each other. And let's just see if we can see some more trades. It's doing some which are more mean reverting in nature and some which are more trend following. So perhaps there is some sort of indicator oscillator based system here too. Okay, interesting enough. Yeah, it's almost, maybe it's indicator based, because here we're seeing like kind of when we return to the mean, but also taking a short. So it could be a price action, more breakout system, or it could just simply be something more indicator based. It could be based on candlestick patterns as well, just seeing, like it's not just like, usually the classic system would be a breakout of key levels. So you'd expect to only see longs when we're going up, and we'd expect to see only shorts when we're in a pretty significant downtrend. But because there's kind of a mix here, it isn't as clear cut as that. So some sort of either indicator based or price action based system, there is a real strategy here though. Looking at the equity curve, it's very flat because he's using recovery. However, if you were to kind of turn off recovery, I venture this is going to look a little bit different. So as my final test for today, let's do that. And it's been on the slower side here, so let's keep scrolling through these trades in the meantime to see. Indicators are active, okay. Here we go. And I have a feeling that when you run it without recovery, it probably won't be as good, but we will have to see it ourselves to kind of fully conclude. Now, going through these trades as well too, we are seeing that it is taking some mean reverting as well as more trend following trades, which is not necessarily a bad thing, because it could help to add additional further diversification. And some longs there too, shorts. Let me quickly pause the video and come back as soon as this backtest is done running. So now I'm back with the completed backtest, and to my surprise, it actually looks very, very good with the recovery turned off. It's not a perfect equity curve, and there are some dips here, which is actually a very good sign. However, I'm a little bit skeptical here because we are seeing almost too much of a, like these overly straight, beautiful periods. And even with this type of like inverted risk reward, you would expect to see a little bit more drawdowns kind of in these flat periods. So it is making me think there might be a little bit of overfitting happening, particularly if he is, because the strategy is less discernible, he might be using indicators and being a little bit, and it's very easy to over optimize that. So far it's actually looking pretty solid. I would definitely continue monitoring the signal. There could definitely be something here. However, the smoothness of the equity curve when you remove recovery is getting me a little bit suspicious. However, it's good to give people the benefit of the doubt. I think we can continue to monitor a signal and see what's happening there. But I know how hard it is to make this type of system work this well on GbpUsd. So could be something here, but at the same time, it's good to kind of be a bit critical and wait to see how the long-term performance looks like. So guys, hope you enjoyed the video. I'll see you in the next one.